And what a year it has been for tech stocks, the so-called Magnificent Seven. That's Amazon, Apple, Alphabet, Nvidia, Meta, Microsoft, and Tesla have dominated the S&P 500 this year as investors scooped up shares of mega cap tech names. Can these stocks continue to dominate in 2024? For a deeper dive into the tech sector, we're joined by Ray Wang, Constellation Research Principal Founder and Analyst. Ray, it's always great to talk to you. I love your commentary, whether you're with us or on social media, on the artist formerly known as Twitter. Always great insight. But so let's start out with the kind of broad headline. Can they continue to dominate in 2024?
Dan, definitely. And happy Friday. Look, 12.1 trillion market cap from the doldrums of 8 trillion at the beginning of the year. The S&P was up 25% and 2/3 of the gain were in these 7 stocks. Now, these 7 stocks also drove 39.5%. They were up 39% in revenues when the rest of the 493 stocks were down 2.3%. What's driving this? It's AI. It's the digital networks. It's their ability to continue to drive revenue growth in the double digits. And of course, the 10-year yield starting to come down is also driving the factor. So the winners here are really the companies that are able to actually continue, but there are also stocks outside the Magnificent Seven that are also going to do well. Companies like Oracle, companies like Salesforce, Nvidia, ServiceNow that are going to benefit not just from the AI boom, but also from the fundamentals of what digital giants have.
So Ray, I have to ask you about your Matana stocks. So people who aren't familiar with the acronym, it's Microsoft, Apple, Tesla, Alphabet, Nvidia, and Amazon. Given the push that AI is making and really changing some of the landscape here, any changes to that acronym, anyone perhaps who should be added or taken out of that list?
They definitely should stay. And we saw the Mag 7 got the extra one, which is Meta. And the reason Meta and Facebook is so important is because they're playing a crucial role in large language models with Llama. They've got some of the best language models, and they're being seen as kind of the Switzerland for where AI is going to play in terms of how people design, build those models, and actually look at model marketplaces. That's actually why Meta is in that mix. And so that's why we've gone from Matana to Mag 7. And I think that's the big shift. In addition, Nvidia's still got a great run. And I think a lot of folks don't realize there's still a shortage of GPUs, and that's playing a big role in terms of why Nvidia stock is targeted at about 550 in terms of where they'll be next year. And then the one that people haven't really been paying attention to really is Tesla. Tesla's got a lot of interesting AI technology sitting in the background, and you'll start to see that come into play as Elon expands his AI ambitions going forward into 2024.
Ray, yes. We've talked about Tesla's AI bot, but Tesla has a lot of challenges. So what is your expectation, or what are you looking for how Elon navigates that in 2024?
You're totally right. There's a lot of challenges. And I think the big challenge is really the overall EV market. The demand is down. And so the question we have to ask is, are people down on EVs in general, or are they down on Teslas? And I think most people realize that they think EV, they equate to Tesla, and it's the charging network that's giving them a boost. It's their fully integrated and automated vertical manufacturing capabilities from battery all the way to the actual delivery. And it's also the fact that they've got the ability to actually play also in the energy market. When you actually look at the Tesla, it's not just about the car, it's the energy network, it's the software, it's the insurance, and it's all the other business models. The other car makers do not have the additional business models.
And Ray, of course, we're talking about clean energy here. I have to ask you about clean tech, and you've named it the biggest loser here. Break down your base case.
Yeah, part of the reason clean tech is down, as you can see, the ESG funds are drying up. A number of the ETFs are shut down. A number of the funds are shut down. And of course, governments are starting to realize the cost of actually achieving these goals may not necessarily achieve the benefits that they're trying to get to. And I think you could see that from the COP28 announcements that sustainability is giving away to business model realities. And we're starting to see those that don't bring green to green are actually not going to succeed.
And then, Ray, what are you looking for? There's a lot of expectation about the IPO market opening up. What are you looking for in the tech space, especially when you think about AI, when it comes to public debuts next year?
There's a lot of great IPOs. We hit a massive drought in the last 2 years, only 148 IPOs, and the big one was ARM. That's really bad, but we're going to see a number of AI ones. I think the ones you're looking for, Databricks, they play a big role enabling AI. You see OpenAI is going to try to get into the market. And of course, Scale AI are some of the plays that are there. But there are also other companies that, we'll see where SpaceX goes. And we'll also see kind of the other ones like Shine and Stripe and other ones that have been waiting for the last couple of years. And in fact, not only have been waiting, they've actually been succeeding in what one have seen a down market and able to achieve double-digit gains and revenue expectations. So it looks like 2024 could be an amazing IPO year.
Certainly waiting for that catalyst to kick off. Always great to have you on. Ray Wang, Constellation Research Principal Analyst and Founder, and Happy New Year to you.
Happy Friday, Happy New Year.